Talking about the earnings, let's put the spotlight on JSW Infra, and to talk more on that, we are being joined by Lalit Singhvi, who's the whole-time director and CFO of the company. Hi, good morning, and thank you so much for your time. First up, on the number front, it's been an inline set for the company with respect to the street expectations. So, firstly, what were the key growth drivers this time, and do you expect that 25% top line growth to continue in Q4 and FY26 as well?
As regards the results, they have been reasonably good in the sense what we have given a guidance, and we continue to be on our guidance. And typically fourth quarter is always better in our case because the minimum guarantees gets built in the fourth quarter. So it should be a little better, than the other quarters. And by and large, we will be on our guidance.
Okay, point taken. Just taking a bit of a sidebar and just highlighting KPIT Tech, because after the numbers it had taken a knock because of that decline in the profitability. I'm guessing the stock should recover a bit because they've maintained their revenue guidance for the entire year. 18 to 22% is what they had indicated earlier, but they've managed to increase their EBITDA outlook for the year to 21% versus 20.5% earlier. And overall, the constant currency growth for the quarter has also come in at 2%. So you're seeing a bit of a recovery as far as KPIT Tech is concerned on an intraday basis. So there was that red reaction earlier, and now there is that big green bar emerging, and that's because they've maintained the guidance as far as revenue growth is concerned, 18 to 22%, despite that 2% growth in Q3, which is on a lower side. But the margin outlook has been increased. The commentary is strong because they're talking about Q3 revenue being in line with their outlook, and that's what is happening with the market reaction on KPIT Tech. It always reacts to earnings, and that's what is happening with respect to the guidance right now. But coming back to our conversation with the management of JSW Infrastructure, Mr. Singhvi is with us. Mr. Singhvi, in Q3, you recorded a 5% volume growth, but I think you have mentioned that for the entire year, you're still watching out for a double-digit volume growth. Can you tell us what would really drive that growth, and are you confident about this double-digit number?
Yeah. So you know that we have two terminals. One is at Tuticorin and another is JNPT. So we have got interim operations approval. Although investment will take 1 or 1.5 years time at both the places, but port authorities wanted us to start the operations, interim operations. So that will give us a additional volume which is not there in this year. Secondly, at our Goa terminal, we have put up a covered shade with the investment of 160 crores. So there, the Pollution Control Board, which has put a restrictions of 8.5 million tons, which will go to 15 million tons. So we'll have additional cargo coming at our Goa terminal, and our EQ terminal at Paradip, which is a coal terminal, which is doing very good. There were some constraints on the railway side, which are now sorted out. So we expect good increase in the volume at coal terminal. So all put together, we are fine with the guidance we are, we have mentioned for 25-26.
All right, but onto your guidance and some of the Capex announcement, what we understand is that company has allocated 9,000 crore rupees Capex for logistic business and is targeting 8,000 crores of top line by FY30. Can you give us a breakdown on where will the company be largely spending this Capex on?
See, with the acquisition of Navkar, we have mentioned that, this is a first step towards our entry into the logistics sector. We want to build an alternate network pan-India basis on the logistics side, which will be a last mile connectivity and which will give boost to not only the port side of our business, but otherwise also there is a very growing business on the domestic side. So here we have now allocated 9,000 crores of investment over a period of 5 years by FY30. Out of that, 1,000 crores are already spent on the acquisition of Navkar. And rest of this would be towards building GCTs. Government has got Gati Shakti program where the land is given by the government and railway line is also connected to this. This would be a very low cost model, and we look forward to build around 15 or 20 such centers across India. And this again business would be on the same model like what we have in the port business, that we have a cargo from the anchor customers in port, and here also again we have a cargo from our anchor customers. So on top of it, we will build third-party cargo. So this model will give us a good revenue because capacity utilization will be quite good, and it will be win-win for anchor customers as well as for us. So GCT will take another 3,000 to 4,000 crores, and rest of this would be towards rakes and containers and other facilities to build this network.
Okay, point taken. But you've done this recent acquisition with respect to Navkar. Can you tell me how's that scaling up, and more importantly, anything more that we should be hearing from you on the acquisition side?
So our plan would be, one is, I said, through Gati Shakti plan of the government, which would be a low-cost model. Secondly, there are other assets available in the space, which are probably they are not able to scale it up. So we are looking at those stress assets also, so that we can buy out. And third would be some tie-ups with certain existing, people who have network and capacity utilization is not there and they are not willing to sell. So these three things are available. The fourth one is a greenfield thing, which would be the last priority because it could be a high cost because of the land cost, etc. But if required, we will go for that also.
And lastly, talking about the company's plan to increase the capacity to 400 MTPA by FY30, can you take us through the new developments in the Capex plan for the next 2 to 3 years?
Say we have said that from 170, we will take it to 400 million by FY30. So if you look at next 3 years, so next 3 years we will take it to say 292 million tons. So increasing the capacity, current capacity is now 174 because 4 million we have just added. So we'll take it from 174 to 292, and this will entail around 15 to 16,000 crores of investment.
Okay, Mr. Singhvi, on that note, we let you go. Appreciate you making time and speaking with us.
If you like this video, then like, share and subscribe to ET Now.